Welcome back to the Dividend Diplomats YouTube channel. Everyone, Lanny, Bert, who are we? We are the freaking Dividend Diplomats, and today we're going to talk to you about an exciting video. What's the topic? Everybody, you know I buy one share of Johnson & Johnson every single week for my wife and I. Committed doing it up till 100 shares. We're getting close. We're a few weeks away from hitting the 3-digit mark for JNJ. So this video is going to talk about what we are going to do next in 3 stocks that I may consider starting to buy one share of every single week once we hit 100 shares of JNJ.
Guys, hit the subscribe button. Definitely give the video a thumbs up. Let's make some noise. Let's spread some love and get this community going. We're all about investing, dividend stock investing, pursuing financial freedom here on this channel by way of increasing that dividend income. Bert, you and your wife, you guys are up to what, around 95-ish shares each?
Yeah, because we just got the dividend too. So that adds a little mustard onto the Johnson & Johnson shares. So yeah, you're right. Looking at it right now in my wife's brokerage account. Oh, actually only at 92, 93. So 7 more weeks. So I still got a little more planning, but you know what? Who cares? At the end of the day, this is still going to happen. We're still going to need to find stocks. And I believe we found 3 good names that in 7 or 8 weeks, Laney, you know what? I'd probably feel the same way. I'd want to consider buying these once per week.
You know, one I know is a dividend aristocrat. One is well on their way. The other is a giant in the banking sector. And I mean, I know you own 2 out of the 3 already. And Bert, I know one you just started to build, and I can see why you're going to town on this dividend stock. I think we need to get into these 3 stocks.
Yep. So let's jump right in. And again, the reason why we're doing this is to build a consistent investing strategy. Avoid the noise. Buy one share of each company every single week. When the market's up, you'll catch it at a little higher price. When it lowers down, you'll build a lower cost basis. But over time, you're slowly building that income. You don't have to think about it. It's a process that's easy growing your income.
You don't have to think about it, guys. You know why? Because we use the Dividend Diplomat stock screener anyways. We look at the S&P 500, their PE ratio. We compare it to these dividend stocks. We look at the payout ratio, looking at below 60%, history of dividend growth. We also look at the yield. J&J, you've been buying that probably between 2.4 and 2.75%. Bert, all 3 of these stocks have yields higher than J&J, the dividend king. Yeah. Bert, hit them with the first dividend stock here. You are strongly considering moving your next target to weekly.
The Instruments of Texas. Texas Instruments, ticker symbol TXN. We talked about this one on the channel. The semiconductor giant. My wife, not my wife's portfolio, this is my portfolio. We've been adding 1 share here and there over the last month or so. We've amassed a position of a whopping 6 shares of Texas Instruments. I've talked about how at least on my own want to get to 20 shares by the end of the year without doing a weekly purchase strategy. We love the company, and I couldn't be happier that we just invested. And to Lanny's point, they're an almost dividend aristocrat here. This Texas Instruments has increased its dividend for 16 plus years. They actually just announced an 8% plus dividend increase. So on my 6 shares, I know our income grew, and all you other shareholders have a lot more shares than me. You saw a nice chunk of change get added to your dividend income.
Guys, you know, some quick metrics, over 3% dividend yield on Texas Instruments, a PE ratio that is right around the S&P 500, a little bit lower. Kind of similar to J&J's PE ratio at 17 times earnings based on $9.46. And Bert, they have a similar payout ratio like J&J. What is that perfect? Is it a perfect payout ratio, brother?
52.43%. So yeah, perfect payout ratio. They have room to continue growing that dividend, even if there is a slight compression in earnings. That's what's so great about Texas Instruments right now.
As Bert is pumped up about TXN here. They just had a nice 8% increase as well, right?
Yep. No, that's right. And it's funny. This is the stock that probably most resembles Johnson & Johnson just from that pure metric standpoint, from the share price at 162. It's almost a 1-for-1 swap for Johnson & Johnson to Texas Instruments. We don't have to invest any more. We're not investing any less every week. We're investing about the same amount. It's a very comparable investment. It's the number one contender on the list so far.
The number one contender for WrestleMania right here, guys, is Texas Instruments. Again, TXN, a very popular now dividend growth stocks during this recession. Yes, dropping the R word, recession, baby.
You heard it here first.
That's right. But Bert, this is not the only stock you're considering because you own shares in this other position. This is a dividend aristocrat with a ton of years of growing their dividend. This stock price is getting crushed this year, obviously, because asset values have declined. I've been buying shares in this company recently as well.
Rowe Price, ticker symbol TROW, down 44% year to date, and even worse over the last 52 weeks, they're down nearly 50% year to date. Currently now, they were having a little bit of a comeback about last month, and then it came back crashing down with the market over the last month. They're now trading at 107.71 per share.
Now, again, the stock prices are as of September 22nd here. So there may be a little bit of a change in market price by the time this video is released here. But guys, these metrics are sick, right, B?
Yeah, PE ratio 12.85. Another company with a perfect payout ratio of 57%. Their 5-year dividend growth rates, it's slowed down a little bit, just over 6% at the moment. And you're right, lady, they are a dividend aristocrat, increasing for 35 consecutive years. But the best metric right now for Rowe Price, Lanny, is what? No, it's the dividend yield. The yield is 4.46% after this price has come tumbling down. Getting some bang for your buck right there with Rowe.
You know, a little bit of a, sneak peek release. I did buy a share today at 107 and change, I'm pretty sure.
Jinkies. I'm kidding. It's awesome, though. I mean, great company, and transparently, this is one of the largest positions in our portfolio. For my wife, she owns 17 shares of Rowe Price. And myself, I own 77 shares of Rowe Price. So if we were to pick Rowe Price
Six more shares.
Yeah, if we were going to do it, this wouldn't be buy it until I hit another 100 shares. It would be a much smaller purchase and probably be one per week through the end of 2022, maybe through Q1 of 2023, but wouldn't be doing that one for a year and a half like we did with JNJ.
Wow. Well, there you have it. The third dividend stock, though, we gotta staff up Jamie Dimon, the president and CEO of J.P. Morgan Chase, ticker symbol JPM. Over trillions of assets on their balance sheet. This stock price is down over 30%. Net dividend yield has also swelled up to 3.6%, Bert.
Yeah, I mean, if you're going to go with a bank, JP Morgan's a great one. I mean, there's nothing more to say. One of the largest out there, one of the best run. Jamie Dimon's the GOAT in the sector. Everybody's kind of following along with what he's saying. They seem to always fire on all cylinders. And yeah, with the price coming down 31% year to date, it might even be a unique opportunity just to buy some JP Morgan on your own or initiate a position, because we haven't seen prices like this for quite some time.
Below 10 on the price to earnings ratio, below 40% on the payout ratio. Obviously, banks usually keep their payout ratio a little bit on the lower side. Got to maintain those regulatory measures there. They do have a nice dividend streak of 7+ years at an average rate of over 15%. Great bank, great stock to consider, Bert. Any reason why it's on your list right now?
No, it was just I was trying to look for something that was a little different. And the reason why we like Johnson & Johnson is the company's history, the company's dividend growth history, their brands, their solid payout ratio, just it's just a great company. That's why I like Johnson & Johnson. And when you think banking, I wanted to replace Johnson & Johnson with a great company, and that's where JP Morgan kind of came in from the banking sector. They are one of the best out there, and at their current prices, it's hard to ignore them, especially when you're going to have some capital freeing up from no more Johnson & Johnson purchases every week. looking to go somewhere.
Yeah, you have 350 opening up, so we'll be excited to see what you plan on doing, guys.
Yeah.
But in summary here, Bert's considering Texas Instruments, Rowe Price, and JP Morgan. JP Morgan.
So everyone, the decision's not final yet. Obviously, these could change. We could swap one of them out in a couple of weeks as we get closer to it. But I'd love to hear your feedback below on these 3 individual stocks. And obviously, too, there's always VYM. There's always SCHD from the ETF front. This video, I wanted to cover stocks, but there is an ETF option of what I could do as well. I'd love to hear your thoughts if you think I'm overcomplicating this, picking an individual stock, and if I should move into a fund such as VYM or SCHD instead.
Guys, let us know in the comments. Subscribe to the channel if you haven't already. Definitely give this video a thumbs up, guys. Let us know what you think. If you had to pick out of these 3, which would you slide into on a weekly dividend stock buy? Bert, any other parting words?
Send us off, Lanny.
That's Bert, the Hurt, and Lanny from the Dividend Diplomats, over and out.